Bitcoin continues to surge upwards. In this video, we're going to be jumping down into the recent technical analysis for BTC, taking a look at what's been going on most recently and what we think is likely to happen next. As I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not consider subscribing, tapping the bell, selecting all the notifications, and you will not miss another video update. If you haven't yet joined us in Discord, guys, you're missing a trick. Check it out, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this one though. We've got a lot of things to discuss, so let's start things off by taking a look at Elliott wave theory. Okay, so up here, following on from yesterday's video, we were expecting a move to the upside, although I thought first we'd have to come down a little bit lower than we actually did. So our low is actually fixed in here at 26,578, and that is done. So what I'll do is I'll remove the yellow box, which was our previous expectations on the low side. We just narrowly missed that one, and of course we can see the move to the upside where we did go above 27,756. I can remove that line as well. Okay, so knowing that we have this structure here, it's important that we just reflect on what happened beforehand. So if we zoom out, we can see that we had this 5 wave here. We can see that we have this little mini minor B wave structure right in here. Okay, and this little tiny structure here helps us understand what this means. Okay, because if we come down a little bit further, here we can see we have 5, 3, 5. Okay, with an overextension in that fifth. Okay, we have a 3 wave down, and then we have this 5 wave move upwards, right? And we are looking at this as a zigzag pattern, 5, 3, 5 coming down here. So this, all in all, right, a lot of people might want to kind of look at this and think to themselves, you know, we are in some kind of 5, 3, 5, 3, 5 structure. However, this move to the upside here would be irregular to that, and it wouldn't be normal to kind of see those kind of things. So instead, I think of this as an impulsive trend-setting move to the upside. We have to consider this as a double zigzag pattern. Okay, a zigzag pattern is a 5, 3, 5. Okay, essentially here, 5, 3, 5. Okay, and then up here we have the 5 waves, come down in 3, we should go up in 5, and we end up with this double zigzag pattern, WXY. Okay, overall, so if I were to kind of wrap this up even more, you can see the ABC structure. You got W, X, and then up there you'll be Y. Okay, so when you see these things, it's important that we don't just jump the gun and think, oh look, we're going up to the moon, you know, it's fantastic, $1 million Bitcoin, and all that kind of BS. No, instead what we want to do is we want to reflect on what these means, because essentially when we see these structures, there's specific rules that are applied, and there's a specific output that comes from these. So taking a look at our current positioning down here, we have this move up, we have this move down. I think essentially what's going on here is we're in some kind of a larger 3 wave structure at the moment, where we've got to come up much higher before we can think about this as a zigzag pattern. So unlike what we had down at the bottom here, where we had this diagonal right at the end, I think we're getting a big extension inside our wave 3. So let's go ahead and just try to map that out where we are. So if we can see here, we have this kind of 1, 2, kind of 3, 4, 5 structure right inside there. We then correct down here. Okay, and now we're looking to run on up a bit further. Okay, now we could look at this potentially as diagonal, but it would be unusual, and it's not impossible, but it would be unusual. So instead, what I think we're going on here is this is a wave 2, all this is a wave 1. So let's go ahead and remove this. Okay, and if I pull in our little structure here, we can kind of go, look, 1, 2, we'll come up here into 3, 4, and then we'd have 5. Okay, and that there would then be our zigzag pattern. Okay, now it's obviously going to see some volatility in here, because I think we could potentially extend a little bit further above and beyond this, but it'll give you a bit of an idea. Our first immediate target for this to kind of play out will have to be up here at 29,768. Okay, so I'll draw that right in there. Okay, that would be our first kind of mini target. That essentially would be our kind of wave 3 minimum expectation, then a wave 4, and then that final 5th wave upwards there. Okay, so all in all, that's kind of where I would place that. Now, there is this little irregular move right in the middle here. And the only way we can kind of really articulate what's going on here is whether or not we have a diagonal within this wave 1 structure. Now, I haven't gone down to the 15-minute chart to kind of check all of those things. So it's one of those where if we don't hit this 29,765, I'll have to spend some time on the smaller time frames, maybe even down at the 5 minutes, just to kind of make sure that we are doing what I think we are in this lower section. It's a little irregular down here at the bottom. We could kind of look at it like this and see that structure. It's not an impossibility that we do have a 5-wave structure in there. It would have to look something like this, and we'd kind of have a little structure like that. So it's not impossible. I don't want to have to kind of go down to the 5-minute charts to check it. I will, of course, if we don't seem to hit these higher range targets. I think we'll kind of push up into the higher range of this box, though. It'll be interesting to kind of see. Our 5th wave targets are right up here at the 30,243 to the 31,343. Okay, now that would complete a double zigzag pattern, as you could kind of see here within this hourly chart. We'd have that double zigzag pattern kind of complete. And again, we'll illustrate this as not a 5th wave movement, because again, a 5th wave movement would be a lot more clear as a 5-wave structure or a diagonal based structure. So again, I reiterate, we're not in a trend to the upside, even from our daily chart right down at the bottom over here. I've been through this a dozen times already. This area down here does not constitute a diagonal. Therefore, this does not constitute a wave 3. This is not a wave 4, and this is not a wave 5. Okay, so we are not doing this 1, 2, 3, 4, and 5. We're not doing that. Okay, instead, what we have to consider is all of this is corrective. Even this recent move to the upside is corrective. Okay, so, and that's important because it's a distinction between whether or not you could go down into new lower lows or not. Okay, under a trend-based structure, you would not expect to go down into new lower lows. Under a corrective structure, it's fair game to have new lower lows. So we have to kind of consider those things and what they mean overall. Okay, so from Elliott wave theory here, it looks like we have more room to the upside to be had. Okay, not only do we see that within the wave counts of what is going on within these kind of zigzag patterns, we can also see it in the oscillator down here at the bottom, of the stochastic, where we are heading up to the overbought area, but we're not there yet. We are, of course, going to be concerned about the weekly, daily, 20-hour, 16-hour, 12-hour, 8-hour charts, which are, of course, all overbought and waiting for a big drop to the downside. My expectations are that the Fed will do something crazy on the Wednesday, and I think essentially that could be where we see the market turn on us, and it could be 0.5, it could be 0.75. Hey, they could do something crazy and give you a whole 1 basis point. Of course, I'm joking and jesting, but you know, you kind of get the idea. Something is bubbling in the background here, something is building, and it is going to pop soon, in my humble opinion. Let's move over into the smart money concept side of things. So smart money concepts is basically tracking the structure, and allows us to understand a few things slightly differently than we would with Elliott wave theory. And of course, all of these things are a bit unusual or not making sense to you guys. Check out 𝗕𝗘𝗪school.com, linked in the description below. I've put a couple of courses together, one on Elliott wave theory and the other one on smart money concepts. So what do we see? Well, we still will have our bullish structure here. Okay, so we're still moving upwards. We're riding the 50 EMA. Okay, we're riding that as our support line here. It's reacting really well at the moment. We have a weak high, so we're still looking for progression upwards, so that's not changed. We have a strong low, so again, nothing there has changed. And ultimately, we've got a lot more fair value gaps. Again, as I was saying yesterday, these are irregular in the way that they're being stacked up. And if I zoom out even further, you can see them all the way over here as well. These fair value gaps are created through imbalances in the order books. Okay, if an institutional player or whale comes in to buy some Bitcoin, and the price down at the bottom here, for example, and you know there's no one selling Bitcoin to them, then the price jumps to where someone is willing to sell it, and that's a little bit higher, but that's not where the institutional player wanted to buy it. And this gap gets created and gets left behind when price jumps through it, because there is very insufficient liquidity inside it. So what tends to happen is once these gaps appear, like this big one here, right, an institutional player comes in, buys at the bottom, no one's willing to sell it to him, so he ends up paying a premium price at the upper end. He's not going to continue buying at premium prices, he's going to stop buying, and price is going to naturally come back down. Okay, now don't always get filled out, but that's normally how it kind of works, right? And then basically once liquidity comes back into the range, he's able to then go ahead and continue his buying. So right now what we're seeing is institutional candles or market makers coming in here and pushing this price upwards and forgetting about the fair value gaps, which is irregular. You don't normally see that, and that gives me the kind of ground to think that something is irregular or being manipulated within the price action of BTC. Okay, you can see a few of these. This isn't too bad, right? You can see on this hourly chart, this isn't too bad. But when I start zooming out and I bring this back down, we can see that they were all left behind over here as well. So this entire push upwards has got a lot of these gaps left behind, and it doesn't make a lot of sense that institutional candles that were unable to buy at 17k because there was insufficient liquidity all of a sudden are still pushing the price up at 27k. It's a whole 10k higher, unless of course there's some other motive behind driving that price upwards. Okay, and it's interesting. I'm not going to go and talk about it too much, but Smart Money Concepts is all about understanding the institutional and whale level investor, and I do find it rather interesting that they've been pushing the price up the way they have been, and it isn't really obvious either at the wallet sizes, count of wallets, I should say, that there's been sufficient hodling occurring. Instead, it's all on the exchanges being kind of manipulated and pushed around, as in Bitcoin that's on the exchange already is being utilized to kind of push the price in their directions. And there's a lot of stuff I'll go through this afternoon in terms of the wallet counts and the exchanges that have given me a bit of a feeling that things are not as they seem. So as we kind of look at this from a Smart Money Concepts, what do we think? Well, we still think there's room to the upside alongside Elliott Wave Theory. We found nice support on the 50 EMA on this hourly chart. We haven't come back down to equilibrium yet. There's a few older blocks in there as well. So everything's looking positive for Bitcoin, at least for the next few hours, in my opinion. Ultimately, though, I do think that eventually we'll get into these higher ranges, tapping into the 30k range, and I think it's going to fall like a lead balloon from there. But let me know what your thoughts are in the comments below. Do you think that Bitcoin is going to be dropping down quite significantly when it hits 30k, or do you think it's going to sail on through all the way up to that magical 1 million in 90 days? Really interested to get your thoughts and opinions on that. And if of course you are thinking that price is going to drop down, are you going to be shorting the market? Let me know. Are you signed up to BitGet? Linked in the description down below. Are you taking part in our competition down in Discord? If you aren't and you're looking for more details, why not check out the description or jump down into our Discord server and continue the conversation down there. Guys, until the next video, have a fantastic day.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.